Welcome to Technical Tuesdays. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing trading the news. But before we start, make sure to like and subscribe so that you can get future content like this. Not only that, I'm asking you guys on a personal level, share so that your trading community can get videos like this. Okay, so that's enough of that. So what does trading the news feel like? Okay, first we're going to ask that. What do you do to trade the news? And how do you take advantage of it? Okay, so if you guys have ever traded the news, it feels like this. Okay, what happens? You miss it most of the time. The moves are too quick. So then why does anybody ever tell you, hey man, you know, there's a news event, there's CPI, there's FOMC, there's NFP, all this stuff. Thank you very much. If I'm going to miss the move, then what is it worth, right? Okay, that's the question. Let's get to the solution. Okay, so I've been through this so many times. And there is a strategy that you can employ, right, in order to trade the news. And it's called fading the news. But before we start and discuss fading the news, let's discuss generally what happens when there's a news event, major news event, whether it's CPI, FOMC, interest rate statement, whether there's non-farm payroll or corporate earnings coming out on a company, any of the above, okay? Any news that comes out, there's usually one of three reactions to it. Number one, there is usually, not usually, but there are sometimes nothing happens. Company misses their earning reports, nothing. No overreaction, moves a little bit. What happened? Well, generally in those type of scenarios, it means that the market has already absorbed the information. There's no new data that we don't know about. So the markets are not going to react to it because it's already factored in. And that does happen. It happens on economic events like the CPI, like the FOMC interest rate statement, but it doesn't always happen, okay? So, but you do need to know that it does happen. Nothing happens sometimes. The markets don't react to it. Number two, this is the other scenario that happens. The market reacts in an extreme way, either up or down, and then continues trickling in that direction. So generally speaking, this is either in a market that we are expanding in, where the markets are growing, or we're in a situation where the markets are detracting and we're, going into either recessionary or into an environment that is not conducive for growth. So let's just call it that. And in this type of scenario, it's very hard to see. It's very hard to trade this type of scenario because it's just trickling and it teases you. And it looks like it's going to turn, but then it doesn't. Okay, this is probably the hardest thing to trade. Okay, and it does happen, so you do need to know about it so that you can assess when you're in that trade. Okay, so that initial trade you missed, okay, because we're not fast enough to catch that trade, and the probability play of entering a news event with a position, in my humble opinion, is overrated because we're not prophets. We don't know what's going to happen. We don't know how the market will react to things. But the counter reaction, we can anticipate. And that leads us to the third strategy, which is fading the news. What does fading the news mean? Fading the news means that you allow that initial knee-jerk reaction, so to speak, that overreaction into either a situation where the markets react on the upside or to the downside for that matter. It could be either one. And then once the markets kind of settle and get their grip, so to speak, and the dust settles, you see that there's a counter move that is an extreme move in the opposite direction. So if we went up, it'll have a counter move on the way down. If you went down, have a counter move on the way up. And those are the type of scenarios, and they happen quite often because markets overreact. That's just the basis of it. That's the bulls and the bears of finding what the true value of the price of any given thing at any given time is really worth. And this happens more times than any other time. And not only that, I do want to add, there is a little bit of a challenge here because when there's that knee-jerk reaction, let's say to the upside, what's considered the top? At what point are you going to say, okay, it's at the top, I'm going to short it here? It's very hard to gauge sometimes, but what you can do in order to increase your probability is do some homework. See at what levels we're at. Are we hitting some sort of resistance-ish area? And generally speaking, that is what happens. We hit some sort of resistance, and then there's a correction on the opposite side. Now, I want to overemphasize this. You need to put stop losses in these type of trades. Not even a question. Not even a question. It's something that is predetermined. Before you go in, you put in that stop loss, because markets like this could really go haywire. And I've seen guys make some serious money in these type of positions and take advantage of trading the news. Thank you for joining us for Technical Tuesdays. We'll see you here next time. Thank you.